Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon, everyone, and welcome to this Thursday, June 26th edition of the AICPA Town Hall. I'm Michael Cerami, and I am very excited to be here in the New York City studio, joined by my good friend Lisa Simpson. Lisa, welcome to New York. Great to have you here this week.
It's been hot in New York this week. It's been hot everywhere, but I've been always enjoying my time in New York, and especially getting to be with you today in the Town Hall studio. So great to be here.
Great to have you, Lisa. And you're right, we arranged for a heat wave, and it broke just today, just in time for you to head back to North Carolina.
And I'm from North Carolina, so when I say it's hot, that means a lot.
Well, we got a very full agenda as we kind of turn the corner and head into the dog days of summer. A lot still happening. We're going to be joined by our other good friend Mark Peterson in just a moment. We've got a full DC and technical update segment for you. Then we have Carl Peterson, our VP of Small Firm Interests, who will be dialing in, and Carl is going to talk with Lisa just about the small firm landscape, a bunch of stuff to update you on there. And then we'll be welcoming in Ed Kless, and Ed Kless is going to talk to us about the transformation economy. I think it's some really good insights to maybe stretch our thinking on this summer afternoon, and then we'll have open forum and closing remarks. So with that, let's go ahead and jump on in, and Lisa, let's welcome in Mr. Peterson.
Hey guys.
There's nothing to talk about, right?
Nope.
Well, you look very composed, Mark. We're gonna, you're like the duck on the pond. I know there's a lot going on under the water.
There's a lot going on. We may be working this weekend.
Well, that's a good thing, right?
It may be.
So, Mark, let's go ahead and jump on in. I know,
Sure.
lots of discussion around this tax bill, trying to get this to the president, but maybe update us on where things are at.
Yeah, I'm going to start with a timeline, which is incredibly fluid. And literally, things changed last night with a ruling from the parliamentarian that I'll mention. But really where they are now is they're taking things through this, what's called the bird bath, and we'll get into some details there, to see if it conforms with the requirements for reconciliation, which means there is a budget impact. It doesn't touch Social Security. It isn't pure policy. The couple other things that are in play as well are, and we've had this discussion on town halls in the past, is this idea of current policy versus current law. And current law would mean that if something is expiring at a certain period of time, you're going to have to compensate for that. That is going to be relevant because as some of these provisions get knocked out during the bird bath, then they will have to figure out if they need to adjust other spending or tax areas. So it does have kind of a collateral impact. There's also a process which they take a run at the parliamentarian, and the parliamentarian may knock it out, and then they come back again. They make changes. It depends on. That whole process, by the way, is very opaque. You never really know what the ruling was or why prior to them getting to the Senate floor. But there have been plenty of examples where the parliamentarian has ruled against the provision and they've been reworked and brought back. The other thing to keep in mind, and it's going to definitely have an impact on timing, is they've got to go through that process. Then they've also got to go through a process of triggers on the Senate floor. So vote-a-rama is what it's called. It's basically 20 hours of debate and the ability to offer amendments. So that's a clock that has to start ticking too. Now they can go straight 20 hours straight through in order to get that done, but that again knocks you back. So I think the thing to watch for is the 4th of July is a target. It's what they want to hit. President Trump is extremely focused on hitting that time. But the reality is it could slip. And August is really when it hits, because that's when, and we've discussed this as well in the past, that's when we have the debt limit ceiling is going to hit. Now, there's wiggle room on the debt ceiling. It may slip into, September, but they want to get that done for sure within the reconciliation bill, if at all possible. I think what they're going to do is they're going to continue to grind away at this, continue to work with the parliamentarian, get into the weekend, and then see if they can make that 4th of July deadline. If they continue to have issues, then and it becomes apparent they're not going to make the 4th of July, they'll send them home. But every time you go through one of these holidays or a backstop, it means you probably end up at the next one. So the next one would be that August recess. But that's kind of how it's laying out. And again, it's each day, hour by hour, we're getting assessments of how this is going to play out.
And Mark, I know, I know this parliamentarian has thrown up a few roadblocks, and there's even been some talk. Well, could they rule on removing the parliamentarian? I don't think you think that's going to happen, but
No.
maybe just comment on that.
No, there were some comments about firing her. That's not going to happen, and there were some comments about, because you can, and this is it's called the nuclear option, where you can overrule the parliamentarian with less than 60 votes. It's been used for judicial nominations. I don't think that's going to happen. Leader Thune from South Dakota, leader of the Republicans in the Senate, has said he's not interested in doing that. It sets a precedent, which could be dangerous. The part this has happened. She's been in this boat before. In I think it was 2021. Democrats were trying to increase the minimum wage in a reconciliation bill, and she ruled against it. And there was noise from that side that they should overrule her. So she's been in the boat before. I don't see it happening. But I will talk about some other issues that I think are the big kind of macro points that they're dealing with right now. And these are real challenges. Any big piece of legislation with this close of a majority, remember it's only 3 seats in the Senate, 3 seats in the House. All we're doing now is talking about the Senate. They got to figure out how they get it over the finish line. Then the House has to decide if they like the Senate product, right? There's kind of 3 big things. One is SALT, state and local deduction, and the House had increased the individual up to $40,000. The Senate took that away, and the House members that are very focused on that, New York and California, are upset with the Senate product. That negotiation is going on right now, because at the same time they're working on a Senate product, they're trying to figure out how they hold that majority, the 218 votes they need in the House. So Secretary of Treasury Bessent has been working with that group in order to see if there's a deal. There was just a report came out right before we started that the negotiations have stalled. Now, again, they changed the numbers, and that could shift very, very quickly. So that's one group they have to keep happy. Then there's another group, which as it relates to the Medicaid cuts. And that was one of the $250 billion that they were going to get in savings out of changes in Medicaid policy that the parliamentarian knocked out. Okay, so that was one of the reasons why they were frustrated with her. Now, that creates an issue with the outline of the bill. Remember, they had to pass a budget in order to get a framework to put the bill through. As I mentioned, current policy versus current law gives them some wiggle room, but that's a pretty big hole, right? So you had people that were going to vote against it, potentially, or threatening to, because they were concerned about the changes to Medicaid policy. But then you get the third group, which is concerned about the size of the bill, the deficit, there have to be more cuts. So those are kind of the 3 groups that you have to watch as this plays out. And they're all still holding tough. So they've got to negotiate all that while they have, real process issues related to, getting the rest of these provisions through the parliamentarian, figuring out whether they lost revenue or they were ruled to be policy and they didn't get cuts, and how does that play out in getting the 51 votes they need in the Senate and the 218 in the House.
So when you said that negotiations had stalled, that's what you had heard right before we started town hall. Was that specifically around the SALT and the
individual?
Okay.
Individual SALT. So it's picking the number, right? So the House had 40, the Senate had 10. The House SALT members, SALT caucus they call themselves, they're blue state Republicans, have said that doesn't work for them, and they're going to withhold their vote for a negotiation. So, but you never know how those deals work out. There are other things that could be negotiated in that may help get them to yes. They got to get them to yes, though, in order to pass the vote.
Got it.
So here's that bird bath I was mentioning, and it is
Mark, we literally gave you a bird bath in the picture to help illustrate.
And I do appreciate that, and so does former Senator Byrd from West Virginia, who it's named after. We could have put a picture of him, but basically it's named after Senator Byrd, and the bath is the process of pushing these provisions through to get a ruling from the parliamentarian. Now, they can still be challenged on the Senate floor. So if a member thinks that the parliamentarian got it wrong, they can have a vote on it. They could overrule a ruling of the parliamentarian with 60 votes, but that's not going to happen. So the only way to really do it in these circumstances would be, as I mentioned, that nuclear option. But these are all the dials that are being shifted.
And within the committees, they come back and they have the opportunity just to make some tweaks. So they're still trying to figure out what they can do to get it through the parliamentarian. But again, you mentioned it's an opaque process.
Yep, and so they'll take provisions back. Some they'll decide that they can't overcome the ruling. Others they may decide, hey, we think if we make these changes, we could come back with a provision to see if it complies with the Byrd rule requirements. But one of them on the next slide, it did not make it through.
Yeah, Mark, there's been a little bit of back and forth here on the PCAOB structure.
There sure has. So then we've talked about this one. There had been for a long discussion about this idea of rolling up the PCAOB into the SEC. Wasn't going to happen under the previous administration, but there became this window of opportunity through reconciliation under a new administration. The idea being that you roll the function, so there still would be a public auditor oversight function. It would just be versus a standalone. It would be a function at the SEC, and it's scored. It's scored, meaning it found a savings because of what was considered redundancy through the two agencies' enforcement functions. Over $700 million, so it was significant. Parliamentarian, apparently, we'll never know the details, but the budget impact can't be incidental. The budget impact has to be primary. So if it appears that the reason for the provision was more policy than budget, there can be a ruling against it, but we'll never know for sure. Now, it could come back. I don't think this discussion is going to go away, but I think it is there. That window of opportunity is probably not there for this to happen, because in order for it to happen as a freestanding provision or in a larger package, it would, outside of reconciliation, it needs 60 votes in the Senate. I will say this for folks in public auditing, public company auditing, there's definitely going to be a different environment than what we've seen from the PCAOB under the last administration. So even though the structure didn't change, I think that the chair of the SEC, Atkins, has talked about a more balanced approach. The previous administration was very, very aggressive.
Thanks, Mark. And then Sarbanes-Oxley is also under review, Mark.
Yeah, there's almost annually they'll do a Sarbanes-Oxley review at the House Financial Services Committee. Happened to be a hearing yesterday. Focus on there's a little discussion around the PCAOB and the concept of rolling it into the SEC. Most of the focus was on 4 witnesses. Most of the focus was on the cost of 404B and whether it was a hurdle for more companies going public. There is draft legislation that would increase the threshold. I think it would be 700 current filers that would no longer have to file. It's about 23% of that whole group that are required to file. This is unlikely to actually make it into legislation. It can't make it through those 60 votes. It could be it's draft language now. It could be introduced. It's possible it could pass a Republican House, but I don't see it happening in the Senate, with less than 60 votes. Now, the SEC and Chair Atkins could make changes to the threshold, depending on what he wants to do. So there's a possibility that there's changes here, but it's done through the regulatory process.
And then, Mark, we've got tax reform in front of both the House and the Senate, and I think we wanted to just maybe zoom out a little bit and kind of remind people of maybe some of our positions on these things.
Yeah, there is. So this is just a flashback to where we were at the House. I also have to say everything we talk about related to tax in this bill could change in the negotiations that are going on right now, could change in the discussions that are going to go on between the House and the Senate. So it's not over until the president signs it. We actually have a very long list of provisions that we've supported, many of which I believe are going to make it into the bill. But some of the examples are 1099K and R&E. A lot of focus on PTET, the pass-through SALT, which we'll talk about in a second, but contingency fees are an issue because of AICPA's ethics. And if you go to the next slide, as you could see, pretty consistent in the Senate as it relates to the provisions that we support. And this is just a sampling of those. We have a long list. We're going to get a nice win on the 529 provisions so that we can get post-secondary education costs, things like the exam, and into the 529 program. So that's a nice one, and we think it's going to make it through.
Great. And then jumping into reconciliation.
Well, yeah, we've got this pass-through entity tax, which is hit hard for pass-throughs for the profession. In 2017, when the bill passed, the first TCJA, they reduced the individual SALT deduction, but during that period of time, and pass-throughs were not available to take advantage of it, during that period of time, 36 states passed legislation that would allow pass-throughs to actually take the deduction at the entity level versus the individual level. And during that time, it was a Trump Treasury and IRS issued a notice recognizing the state legislation. We also have talked about the fact that the then chair of the Ways and Means Committee, who was one of the architects of TCJA, Brady, has also come out and said the intention was for pass-throughs to be able to take the deduction. So in the House, they increased the individual, which is that whole discussion on individual that we talked about, but they eliminated it for SSTBs, which would capture. It's a narrow set of the pass-through community, would capture the dentists and the not the architects and the engineers in this case, but the dentists and the veterinarians and those of us that are in services. We have been extremely active as it relates to this. The Senate product that's now under discussion actually increases it to 40,000 or 50% of PTET, but it broadens it. So they actually got rid of the SSTB restriction. They took it to all pass-throughs, and they increased the number to 40,000 or 50%. So that was an improvement, not as good as current law, big improvement over the House product. That's where it sits in the Senate. We are still working to even make it better, which would be current law, just being able to enjoy what we get right now. And a lot of this is about fairness with how corporates are treated. There's no reason that pass-throughs should be disadvantaged as it relates to taxes versus corporates.
And Mark, I think that's been a really important part of the messaging that we've been asking all of our members to convey to the House and their Senate representation, is that this is really about creating more parity between C Corps and pass-through entities, right?
Big time. Well, why should H&R Block get it and a partnership not get it? Why should an optometrist not get it, but LensCrafters does? So it's not sound policy.
Yeah, and the quick thank you to all of you who reached out to your congressional delegations and all of the state societies who really helped get the message out. This is a really complicated topic, and so I'm sure that for that the House and the Senate members who were getting emails and calls about it, they were probably really scratching their heads. But the parity concept, I think, really helps get the message across. We're simply looking for parity.
And it made a difference, Lisa. You're absolutely right. Thank you for saying that, because the town hall community was involved, the firms, the state societies, great partnership with the state societies. That all made a difference. And we did see the dial start to turn. Now, it's not over. You want to protect gains or even make more. But, being engaged makes a difference. And this is an example of that.
Yeah, agreed.
At least I think you wanted to remind everybody of some of the great resources we have available.
I do, because our team has made some great resources that I think are going to be very helpful to everyone as we're trying to compare current provisions to what's in the House bill to what's in the Senate bill. And they've given us a couple of charts that you're going to be able to download for the next couple of weeks if you are not a member of the tax section. So these are all open for you for a couple of weeks. And I'm going to point you to two charts in particular. I've got printouts over here. But basically, one is focused on some personal financial planning considerations that will help you have conversations with your clients about what's going on. And then another one that's focused on just more general provisions. So great access to those resources. You've also got, if you want to stay up on the latest news, we've given you a link to the Journal of Accountancy, where we'll keep updating where we are in the reconciliation process, and just a lot of other good things, including some client-facing resources.
And Mark, we did have one question, maybe comment on just, is it too late to reach out to your representative on the PTET issue? Never too late, right? Yeah.
No, we're going to play through the whistle. You know, we again, the Senate product was a big improvement on the House product, but you know, this is still live. It could go the other direction, or it could get better. And so, absolutely, continue to reach out.
Great.
That's great.
And so, Mark, switching gears, we have had some movement on digital assets.
Yeah, the Senate got a bill out on digital assets, crypto, fiat-based cryptocurrency. It was a pretty good vote. I think it was 68 votes in the Senate. So there's some bipartisan activity going on. It's moved to the House. There's a lot of momentum to get this done. There's also some controversy around it. The Senate is pushing hard to maintain the momentum to get it done, and for the House just to adopt the Senate product. The president has weighed in, basically saying the same thing. But the House put a lot of effort into their bill. And so there are some differences. There's a couple things. I mean, there's going to be tax implications, but there's also some audit requirements, audits of you know, the annual statements, but then also you know, monthly reports as well. So we've been engaged in it, and this is going to be, you know, playing out if they can reconcile these issues. A different kind of reconcile it, but you know, again, it was pretty monumental to get it out of the Senate with a strong vote like that. So you do see an interest in getting some regulatory framework around, you know, cryptocurrency.
And Mark, things quieted down a little bit on the tariff and trade front, at least for a while, but we've got some big strike dates coming up that may mix things up again.
Yeah, no, it's coming back. You know, those pauses are starting to run out. There's been some court action, which we knew was going to happen. You know, a federal court blocked the administration. That what the administration's been doing is they've been using executive powers based on statutes, emergency powers. So, you know, based on economic emergencies or, you know, national defense type emergencies. That's what's been the foundation. Some of these go back to the 1800s, and so they've been challenged in court. And so, you know, there's a stay currently on one of them. The Supreme Court's going to be hearing another one probably this summer, as it relates to the foundational statute at which the tariffs were imposed. And so, you know, that's going to be kind of a big point. We'll see how a lot of these executive orders around tariffs were very, very aggressive. That has been kind of the model that's been used. And so we knew they were going to be challenged in court. How that plays out is going to be interesting to watch. We talked about the pauses running out July 9th. We're going to see the EU pause will, you know, be over. The tariffs will resume. Some saber rattling coming out of the EU as it relates to where they are in negotiations with the U.S. This is a, you know, bilateral activity, which was part of the plan for the administration. And so we'll see how that goes. I mean, if they think that if the Trump administration thinks that it's advantageous, they could hit pause again, you know, or they could decide to escalate. So that's one we're going to watch closely. And then, you know, some stuff's getting done. We're seeing lots of motorcades here coming back and forth with these bilateral deals. The UK got one. It appears between Geneva and then a meeting later in London that things have kind of calmed down a little bit with China, and they're moving in a direction. And so, as far as getting to some certainty around the tariffs, I think that's a big one everybody's watching, obviously. But individually, countries are getting done. And at some point, they're going to announce, a number. I don't know what the number is. It may not be 60, but it might be 20 or 30 of these bilateral deals. Again, in the hopes that from a business perspective, we start to see some certainty.
Great. And I know from an advisory perspective, Lisa's going to be getting into that a little bit with Carl in just a minute. But Mark, it's official. We have a new IRS commissioner confirmed.
We do. We got him confirmed. And one of the first things he's going to have to do is to implement this tax package. We still think the bill's going to pass eventually, which means that they've got to implement it, which is a huge issue. So they're already having discussions, and he's been public about starting to do the work to get ready to implement a significant tax change. Well, they're getting ready for fall due dates, and then due dates again. April will be here soon, and we should probably talk a little about the IRS because I think they're going to be under a lot of stress.
So let's go ahead and do that.
Yeah, we've been talking about since the administration came in. Doge was put together with Elon Musk, and the Doge activity is continue even though that Mr. Musk is gone. But there was a lot of focus on Treasury and the IRS to reduce staffing. These early retirement packages were offered. Probationary employees were let go. They're in the new budgets that are rolling around. There are even further cuts. I will say, though, if we go to the next slide, that Aaron Collins, the taxpayer advocate, was very complimentary to how everything worked in 2025. Now, I will say a lot of the planning prior to a tax season is done before the tax season. So that planning was done probably in 2024. But when you think about everything that was going on those months of tax season related to federal employees, it was pretty amazing it worked out the way it did. The surveys that we've got back have been fairly consistent with previous years, which basically she's mentioning. And she's identifying the same issue we have, is the concern around, the impact on services going into 26 and then this fall. Now, again, we don't pick the size of the budget or how many heads should be at the IRS, but we do need service levels. We need service levels in order to meet the compliance needs for, not only us, but the taxpayer. So we've got some resources here as well, Michael.
Thank you, Mark. And then government funding.
I know. So we just talked about the poor IRS, but in the middle of all of this reconciliation discussion, they still have to get appropriation bills done, and they got to get the government funded before the government deadline, of September 30th. And so, they're gonna get done with this reconciliation package, and then they're gonna have to deal with how they get the government funded. Do they do a short-term resolution? Are we going to be dealing with a shutdown? That could have a huge impact, obviously, on the IRS. So, that drama is going to be around, not just the IRS, Department of Labor, other agencies we work with. But, they're going to have to figure out how to do that. And one of the ways they've been doing it in recent history is to put together a omnibus bill, a bill that includes, a number of the 12 appropriations bills. But there's been a lot of pushback about doing those big bills. And so, can they get all these bills done? Can they get them conferenced and then signed by the president by September 30th? Feels like a tall order.
Well, Mark, that was a lot of great information. I appreciate how quickly and digestible you went through all of that. I know we're going to have you back shortly for open forum, and we have a bunch of questions. But Lisa, I think this does set up your conversation with Carl really well. There's a really big role for our tax professionals to be playing with all this new information.
Absolutely. And with that, I'll ask Carl to join us, because we're wondering, with everything that we have just been talking about, and a House bill and a Senate bill and a timeline that keeps moving, Carl, how are practitioners having conversations with their clients while navigating this uncertainty?
Wow, it's a great question, Lisa. The conversation seems to be, there's changes that are going to happen. There's opportunities, probably. There's things we need to talk about. We're not sure where it's going to be on the Senate bill and the House bill on SALT and all those things, but we need to start having those conversations, especially now we're here in the summer months. There's a lot of conversations and planning going on and strategizing what might be best for their business, right? So even the conversation about with new clients and existing clients, do we have the right type of entity? What should we be doing? I mean, you've been in, in the profession long enough. You remember the cycles of there are times where, man, we're all focused on doing pass-through entities or LLCs, or let's talk about what should be the type of entity for you. Well, it's going to probably come back again, right? With all the new changes that could happen.
That's a great point. And you've also got the personal financial planning aspects of what's going to happen to estate tax limit or caps on, what estate amount is going to be taxed versus not taxed. And so where are we going to end up with that? What do you want to be thinking about for your gifts and just charitable deductions and things like that? So definitely a lot to talk to clients about. We've given you a link on the slide to a great resource, our Tax Section Odyssey podcast, that has a couple of our favorite practitioners. Well, you're all our favorites, but a couple of our volunteers that have really contributed to the conversations. And so you'll get some insights into how to think about who to start talking to and what conversations to be having. And I'm going to, again, refer you back to those charts that we talked about a little bit ago, because those are going to help frame the conversations as well. And bonus in this Tax Section Odyssey podcast is if you're still a little confused about PTET and SSTBs and everything that we're trying to talk about there, the podcast will give you some good kind of plain English opportunities to listen to a conversation there. With that, let me make my formal welcome back to Carl. Carl, as you all know, is our Vice President of Small Firm Interests, and Carl is on his last week with the association before he retires at the end of June. So I wanted to make sure that we had this time to chat with Carl and get some of his reflections on his time with the association and what he's thinking about for small firms. I've given you a link to the monthly articles that Carl's been doing for us for the last, 10, 12 years. So if you want to catch up on at least the last couple of years worth of what's on Carl's mind, you've got a link there. But Carl, first of all, I want to start by saying thank you, and I'll give you more kudos at the end. But what is on your mind as you're thinking about your time representing small firms with AICPA, and what are you thinking about their future?
Oh my gosh, so I've got the best job in the world, of course, as everybody knows. But so I'm still traveling. I'm in Tennessee today, and I met with a number of small firms, and it is a great time to be a CPA. I remember, and you probably remember as well, Tim Christian, a past chair of the AICPA, used to always introduce, start his sessions with, it's a great time to be a CPA. It is a fantastic time to be a CPA. And if you think about all the technology, all the tools that are coming out today, coming out, it's phenomenal. You and I were part of the CPA.com Startup Accelerator program earlier this year. And if you recall, there's one called Keeper, and it's a practice management. There's 2 firms in here today that are using Keeper. So small firms are leveraging technology more than they ever have. They're looking at technology and its capabilities and what's coming out in a way they hadn't, I can't wait to try this. I can't wait to use this. I want this to be further along. So it's a phenomenal time to be a CPA. I think it's funny, over the years, there've been times where when I was, before I came to AICPA, somebody's like, well, what's going to happen to your firm? Because, there's all this software out there. People are going to do their own tax returns. Well, now we have AI, right? And it's it's creating tax returns, but the demise of small firms not there. In fact, I think we're going to grow and increase the number of small firms greater than we have in the past. I think that is the influence of technology. We could today, you could start your own firm today and leverage technology much more efficiently than years ago when I started my own practice.
Yeah, the line I've always heard is technology is the great equalizer, and I think that's just so true, especially these days.
I think you're right. I think it's more true today than it ever has been. I think the capabilities of practitioners today to learn just ChatGPT or any other generative AI application, and they're starting to think about how they want to do it. They're not waiting for the platforms and the applications out there to come up with how you should be using it. They're coming up with their own ideas, and I think that's cool. I think it's very innovative.
Yeah. Eric Askerson and Michael and Khalil were in a meeting with a lot of my colleagues yesterday, and we were talking about the Startup Accelerator and what a great program that is. And they were talking about how technology firms are really looking for firms that they can partner with from the ground level. And one of the Startup Accelerator cohort had basically embedded with a practitioner for a couple of tax seasons and really just shadowing them and looking at all of the processes and looking at the hiccups. And so I think when you've got technology firms that are so interested in solving problems for the profession and again looking for someone to partner with, I think a small firm can really jump in and take advantage of that.
Absolutely right. Absolutely correct. And it's so cool that an entrepreneur who's not in the profession is taking time to embed themselves. That shows, I think, how the value of what we do it is. And you think about the cohort, some of those are so focused on small firms. It's pretty great. It's really good.
Yeah, agreed. So we can't have a conversation about the profession without talking about private equity, mergers and acquisitions, and how are small firms going to compete and those kinds of things. So tell me what you're thinking, what you're hearing. What are small firms saying?
Oh my gosh, we even had this conversation today, just this morning with small firms. I think there's private equity has brought a lot to the table, not only for the large firm, but small firms as well, in a lot of different ways. I mean, private equity is a great option for many firms, depending on where they're at, what they're looking for, what they want to accomplish. It's great access to capital that firms didn't have before in the same manner. There's a lot of positive things about it, but it's not for everybody, right? There's a lot of small firms that are like, there is no way I'm going to do that. I just don't want to. Or they have other goals and things and aspirations that being part of a private equity group with different influences and maybe being part of a larger structure isn't who they are. So, talk about small firms, they're not going to go away. But there's certainly, it's creating opportunities. It's making small firms think about, okay, I've been in this format and this is my structure, it's my business model forever. Do I need to change that? And do I need to transfer my business model, which I know leads right into our PCPS resources, which are phenomenal as it relates to this. But the conversation is truly happening. And I think a lot of this really pushed and fueled by private equity. Should I have an alternate practice structure? Should I do something different? Or what's my model going to be for governance long-term? Should it be a corporate structure? Should I be, what should I be? I think private equity has a big influence, and I think really all positive, actually.
And I think it can drive conversations about all those things and capital. I mean, that's really why firms are looking at alternative investors, is they're looking for sources of capital. So as a small firm, if you're thinking about the future, whether you intend to grow and scale quickly or whether you want to create your own lifestyle firm, you're still going to need capital to invest in this technology. So it's driving business-oriented conversations at the firm level. So I think it's all interesting conversations to have.
Right?
Yeah.
And we're going to continue to have those for a while.
Yeah, absolutely. Great time to start a firm. We've talked about that. And again, I love the energy and the passion that I see in the small firm community. I'm, again, so thankful to you for the commitment that you've made to small firms throughout your entire career. A lot of people probably don't know about your time running a firm in Minnesota and about the advocacy that you've been doing at the state level before you even came to join us. And just on a personal note, Carl, I've been a huge beneficiary of your wisdom, your experience, and your patience. Personally, I just want to thank you for everything that you've done for me, for our team, for the AICPA, and especially for all the small firms out there. We're going to continue to serve small firms. We are trying to find people who are not afraid to try to fill in Carl's big shoes, because he is going to leave some big shoes to fill, but we will certainly continue with that. Carl, final thoughts from you.
But, whoever takes my role is going to do probably a better job than I ever did. They're going to be smarter and all those things. But it's a great time for us to go through this transition, not only for myself, but I think for the profession, to have somebody become that new small firm advocate. So I'm excited about that. I know we've got some great candidates. And I do want to mention, one of the things that it seems like a small thing, but I will miss sometimes those quick emails of like, ooh, what do you think about this? And we can make that communication. And I'm going to miss that. So I really appreciate all the years that I've worked with you as well. So thank you.
Thank you. Well, Carl, we'll have you back in open forum while I try to start reading the list of kudos that are being thrown your way.
All right, thank you.
All right, Michael, I think we've got another interesting conversation up next.
We do, Lisa. But first, I just want to say that was a great discussion with Carl, and I'd like to echo everything you said and just say that Carl, in addition to a wonderful career in practice and as the small firm advocate here at ASPA, probably just one of the nicest people I've met in my career. So it's just been a joy to work with him, and glad that he's getting to enter this next chapter in his life. So. Nothing but kudos, Carl. But that was a great discussion, Lisa, and it is. There's so much to make sense of out there, and that's why I think it kind of sets up our conversation with our next guest, Ed Kless. So, Ed, welcome. Welcome to the Town Hall.
Thank you. I'm thrilled to be here with you guys. Really appreciate you allowing me to share this concept with the AICPA.
Well, Ed, you're nothing if not passionate, and so I'm really excited to kind of jump in. Ed is the co-founder of Threshold. His other founder is Ron Baker, who some of you will know. Ron and Ed have worked closely through the years, most specifically on helping firms develop smart pricing strategies. And you know, Ed's been in and out of the profession for just about all of his career. They also co-host a podcast called The Soul of Enterprise, which is a great listen, and are talking about all the latest hot topics and just have a lot of good sage advice. So, Ed, really excited to welcome you. So, Ed, let's start with just talking us through this concept of the progression of economic value that we have here on the slide.
Yeah, minor little thing, Michael, right? Just the economic value and how it's been created from time immemorial. Yeah, this is such a fascinating idea. And first, a shout out to Joe Pine and James Gilmore, who were the developers of this model. They wrote a book that came out in 1999 called The Experience Economy. And I know that Joe is working on a book called The Transformation Economy, which is due out in February of next year. And this model is what they originally put forward back in that 1999. It is absolutely fascinating. It is this concept that as we move from one type of output in the economy to the other, it completely transforms the way we think about what the economic offering is. And I know this is a very busy slide, so just to keep the axes in order here, the x-axis, of course, is pricing power from low to high. You have higher pricing power toward the right-hand side of the model. And then also it's whether your competitive position is undifferentiated versus differentiated. So let me explain. I'll use an example that we can take through. When we first started extracting commodities from the earth, let's just call it wheat and eggs and water, those kinds of things, those were fungible, right? We extracted those and perhaps bartered and traded for what could happen. Then, in order to differentiate a commodity, what you needed to do was create a good. So from those basic ingredients, we could create bread, let's say, and I would make bread, and then people would buy a loaf of bread or a cake. Right? And as you're buying the cake, notice that you're not buying the eggs and the sugar and the milk, you're buying the cake in total. And what appears on your quote invoice is the cake itself and not the things that it, fancy word here, subsumes. Then if we want to differentiate the cake, well, we have to deliver services. So we would go down to our local grocery store or bakery, and they would decorate the cake for us and write happy birthday on it or whatever that we wanted on that cake. And then we would pay for the decorated cake. It wasn't broken out. We didn't say cake and then 5 minutes of decorating that they would put it on. It was just the decorated cake. So notice again this principle of subsumation. And then when we moved into the experience economy, we had, say, an organization like Chuck E. Cheese say that if you come and have your birthday party here at Chuck E. Cheese, the cake is included. You don't pay separately for the cake. You pay for the experience of going to Chuck E. Cheese and having the birthday party. So that was the notion of the experience economy. Well, notice this principle of subsummation comes all the way down. And what we think is so interesting is we're hearing a lot of talk about people who are productizing their services, which is really interesting because in one way, it's actually going the reverse on this progression of economic value rather than the other way. And we think that for the most part, professional firms are going to skip over the experience portion of this economy and move to this next thing called the transformation economy, and where we literally transform individuals, groups, maybe even entire organizations, and that's what they are going to purchase from us. They're not going to buy all of the other stuff. They're going to buy that transformation, a move from A to B. And what's so interesting about it is that we think that the accountants are uniquely positioned to be able to do that. We think that accountants have been doing these transformations. We've just not been using the language of transformation to do it. And that's why we're so excited about this, because all transformations revolve around one of four things: making people healthier, wealthier, wiser, or live with more purpose. And what's cool about those is that you don't have to gin up demand for them. All of us want to be healthier, wealthier, wiser, and live with more purpose. You really just have to discover them in a conversation. So that's what we think this experience economy is going to bring to bear on the professions. And it's a as Carl said, it's a great time to be an accountant.
So Ed, you and Ron are experts in pricing and pricing strategies. So if I look at these concepts, time saved, time well spent, time well invested, maybe connect the dots for folks on what that has to do with with the pricing and value creation.
Sure. If you look at these different stages, when we deliver services, we really were saving the customer time, the client time, right? They could, and I'm putting this in scare quotes, they could do their taxes on their own, let's say. But they chose not to because it would take them some inordinate period of time, and they lacked the knowledge and insight that the accountant had. So what we were really doing is we were saving them time. It wasn't our time that was valuable. It was actually the time that we saved them that was valuable. In the experience economy, you actually want to spend time with the organization. Let's use Disney as the example. You want to spend time at Disney to have an experience. And that's the time you're spending with them. In the experience economy, your client wants to spend time with you, not the financial statements that you produce, not the tax return, but they want to have face-to-face time with you to be able to garner your insights and knowledge and wisdom about whatever it is that you've been working with them. Well, in a transformation, it goes one step beyond that in terms of time. When we're working on a transformation, not only will the person spend time with you, they will then take some of their time that they will invest in the future about the concepts that you are working with them on to improve themselves, and then perhaps come back to you with different and more questions and further the conversation. So it's a really interesting progression of what we think of in terms of the concept of time. It's not our time that's valuable per se, it's actually the customer's time that is valuable to them. And when we get to the point where people are willing to invest their time on ideas that we provide them, that's when we know we've really got them locked in.
So Ed, we have a lot of small and mid-sized practitioners on the town hall, and a lot of them are from Missouri, show me. So they want to be convinced maybe of some of these concepts. So maybe talk a little bit about how you move from this, guided transformation to delivery of services in more practical terms that they can maybe, apply.
Sure. And the first thing to just reiterate is that all transformations are about movement from A to B in some kind of a theoretical construct, right? So the examples that I have here, the top one in each of the boxes is just an everyday example. So let's take the one of refinement, right? Well, this is a small change in degree and a small change in scale. So you're a wine drinker and you want to become a wine enthusiast. You want to be able to go to a restaurant and be able to look at the menu and pick out something that you think is appropriate without having to call the sommelier over, right? So that would be a refinement, but you're going from to. Well, in a refinement, let's say inside a firm, they could go from being just an application user, an app user, to someone who's an application certified or application expert. So that would just be an example of a refinement type transformation. And of course, the software companies themselves might be the ones that are responsible for doing that. I see people posting on LinkedIn every day how they have achieved a certain certification on a different product. So those are the types, those is an example of a refinement transformation. For the firm, what could the firm provide to one of their, what I'll call an aspirant now, not even a client, but an aspirant, is changing from college anxiety to college calm. I have my son who just finished his first year at Texas A&M. By the way, he's working for the Texas Society of CPAs. This is an internship, by the way. So but when I was going through this process of, we had to fill out that FAFSA form, right? The financial aid form. Well, you know what, I thought about this, and it created a lot of anxiety inside my household to fill this form out. It wasn't that big a deal, but it created anxiety. And I thought, who would have the birthdays of all of the people who are potentially of college age of their aspirants and might be able to say, you know what, I'm going to be able to provide you with the exact information you're going to need to fill out that form, or better yet, I will even create it for you. So there's a tiny little refinement that would relieve anxiety by going from college anxiety to college calm in the aspirant. And I know we're relatively quick on time here, so I'm going to jump up to the metamorphosis level, and I'll give because this is kind of bigger. So this is a large change in scale and a large change in degree. And this is, the example would be going from single to married. All of us that have gone through this experience, as much as we would love to be able to explain it to people who are not married, you cannot really explain what it really means to be married unless you're married. Right? There's it's just beyond comprehension until you make that transformation. And I think inside a firm, moving from client accounting services to client advisory service is such a transformation that would happen. Because if you really think about it, if you're selling client accounting services, that's like selling McDonald's hamburgers. But client advisory services is like being a steakhouse, a high-end steakhouse, say Morton's. And it's really challenging for firms to be both McDonald's and Morton's, because it sends a confusing signal to the marketplace as to which are you. One set of customers is going to be disappointed. So you have to figure out which you are and target the market around that. And then lastly, what could a firm begin to do to its, again, I'll call them aspirants now, is instead of just helping them live their legacy, maybe help them leave a legacy. They go through a transformation toward their end of life, where they not only want to enjoy their living, but what can their legacy be for not only their family, but for entirely society beyond just what they have done. So, and these are the things that I think accountants can begin to sell. We're not going to productize them. What we're going to do is we're going to sell the actual transformations to these folks, and that's what they will pay for. It's a fascinating idea, and I really think that Joe Pine and his is really onto something here. We look forward to continuing the conversation around this.
And I think, I'm sorry, I was just going to say, I've been looking at some of the comments, and so I think the last two examples of putting it in the terms of what we do has been really helpful, because we do have firms, we do have practitioners that are moving beyond, just the productizing of here's your financial statement, here's your tax return, into that advisory, and they're creating the experience. But your premise is, let's take it beyond just the deliverables behind it, and let's think about the broader, more holistic goals of the client and how we can help them transform their the way they're engaging with us.
Yes.
Okay.
In short, we want the profession to profess something, right? That's what it means to be a professional, is to profess something, to believe in something, to bring your knowledge to bear on a situation.
And when we talk about what we do in public accounting, or what we do in a finance role, we tend to talk about what we do in terms of the deliverables. So we know that for the benefit of the profession and the benefit of making the profession more interesting to potential candidates, we need to talk about the impact that we have on the lives of the businesses and the clients that we're serving. So I think that's maybe a little helpful for me in terms of how to adapt all of this to how I think about things.
Yes, it is conceptual, but we think we need some changes to concept and changes to our theory, right? Because we just continue to just do small incremental changes. That's not what's happening in the workplace right now. That's not what's happening in the profession. We're seeing this type of transformation.
Agreed.
So Ed, you've got a lot of fans on this concept. I think you're stretching some thinking here. I would love to get into a conversation on metrics and stuff. But I think what struck me is you and I talked at Engage a couple of weeks ago, and you handed me a letter that you referred to as your kind of Jerry Maguire letter, and you said this is the inspiration for all of this, and that letter can be found here through the QR code and the URL that really just explains the passion that you and Ron have behind this thinking. And I think you're encouraging folks maybe to just kind of take a look, and it gives a little bit more of your concept thinking on this. But anything you might want to add?
Yeah, we just love to connect. This is a movement. This is a quest, and we know that there's a lot of thinking that will continue to be applied to this, and that's why we're so excited. Just like Ron was excited 25 years ago in the beginning of the value pricing movement. That's all included in this, but this is now, I think, beyond that. So thanks again so much for having me on. We really love this idea and love getting it out there.
Great. Thanks for being with us. Ed, we'll bring you back in just a minute. And Lisa, you just talked about a lot of the thinking that I know AICPA and CPA.com are doing around business model transformation, and there's a lot of great resources that we have in that regard.
Yeah, absolutely. And I think it can be helpful to hear from firms who are making these transformations already. And that's a fundamental concept of how we're thinking about business model. And so you've got links, and as always, we'll continue to talk about the resources that we're developing both at PCPS and CPA.com around making some of these truly transformational changes in how we run the profession.
Well, great. Well, let's bring our team back up here for a couple of questions. And I think maybe I'll throw out the first one, and I'm not sure if Lisa or Mark want to take it, but there actually was a lot of kind of piggybacking on the conversation we had earlier, Mark, about just, it's never too late to go and talk to your representative. And there's just some questions about, that would be easier if we had, if they had the language or the written content to be able to maybe just mark up and take. And we have all that great stuff.
We got it. We've got a whole toolkit with a template. We've got all that ready to go included with resources. We can push that all right back out to the town hall community. Absolutely.
Yeah,
Right.
and we can make sure we put that in the follow-up newsletter next week. Yep.
Lisa?
Carl, lots of good feedback. I think there's maybe a little more interest in how you see small firms being successful. Is it niching? Is it delivering those client advisory services that Ed was talking about? Are you seeing any specific opportunities for smaller firms or someone who wants to start their own firm?
I think it's still around what questioning what do you want to be? You're going to be a lifestyle firm, all kinds of opportunities, but I think a lot of the opportunities surround the niching, right? What are you specializing in? What are you passionate about? Your clients pick up on whether or not you're passionate about the industry. So I think being passionate and focused, I talked with firms today that have started their own practice, and ones that have started years ago, they said they bought somebody out. They said they wouldn't do that today. People are starting off on their own. They're starting off on doing their own thing, right? There's, small firms that are starting SOC services, right? So they're leveraging that experience and that side of our profession, as well as CAS services. Their firms just starting right off the bat with those. But usually most of them are all niched into certain industries.
Carl, that reminds me that we have a great resource that we've developed with Aon, our professional liability insurance program, on starting a CPA practice checklist. So we'll include that in the newsletter as well if that's something that you're interested in.
Well, great. I think, go ahead, Ed. I'm sorry. Carl, go ahead.
No, I was just going to say, that reminds me. So at Engage Conference, I sat in on the starting your own firm practice, the EDGE track with the young professionals. One of the things they said, Lisa, was that the resources at AICPA to help you start your own firm, check them out. They're there. So that was a great support for us.
Okay, we'll make sure we get that link out.
Mark, Ed, Carl, thank you very much. Great discussion today. Really appreciate it. A lot of work to do, but great information. Thank you, guys.
Thank you.
Absolutely.
Thank you.
Well, great. Well, moving along, Lisa, just, we had a lot of conversation earlier in your discussion with Carl about technology. Want to remind everybody, a great resource that launched a couple of weeks ago. It's the AI in Accounting Report. So for those of you that want to just kind of understand how the adoption curve, specifically in accounting and finance, is happening, the status of it, both from a vendor perspective, but also a practitioner perspective, go ahead to the CPA.com site and download that report a lot. It's a really good read, a lot of good information in there. And we've also launched our AI in Focus monthly newsletter, which is specifically drills down on, the progress of AI, specifically with the accounting and finance area. So if you go and you want to sign up for that newsletter, it's a monthly, please do so. And I think you'll find it really informative and a very quick and easy read. Lisa, the MAP survey's coming out, or is out?
So our benchmarking survey, we've extended the deadline. So we'll give you until July 18th to participate. And again, as a reminder, firms that participate will get personalized results against revenue bands, geography. If you're also a member of PCPS, which is very reasonably priced, you'll have access to a platform that lets you slice and dice and analyze and download. So I'd strongly encourage you to participate in this. It is the largest in the profession, and I'm highly competitive, and I want to get more responses than we got 2 years ago. So do us a favor, give us your benchmarking information, and you're going to get some great insights back on that.
Thank you, Lisa. And then lastly, the Digital CPA, great event in December, all about transformation of the practice areas, open for registration. So the super early bird is open until July 31st, so we hope to see you there. And then lastly, our next town hall will be on July 10th at 3 p.m. Eastern Time, and we look forward to seeing you all there. Lisa, thank you for a great session.
Absolutely. Everyone have a great July 4th, and we'll see you in a couple weeks.
Thanks, everybody.
Thank you for your participation. You can also subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and find resources at cpa.com/townhall. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.